So I'm recording now. So this is advanced MA. We shall continue with some concepts from intermediate level. Now, before we say anything, we have like several topics which we need to cover. So we have around 8 topics. What the course want us to do. So from topic 1 to topic 8. So it's a start with topic 1. Introduction to management accounting or strategic management accounting. So topic 1. One is called strategic management accounting information. Strategic management accounting information. This is the topic 1. Strategic management accounting information. Now, let us start by defining what is management accounting. Let's start by defining what is management accounting. Let's start from there. Management accounting. And you can say it is a process of identifying, measuring, analyzing, and communication of information required for effective execution of management functions. We can use this one. Process of identification, measurement, analysis, and communication about cost. Communication of information about cost required for effective decision making. Now, 2 things you need to know here. Making. Now, in order to execute management function. Now, there is 2 things you need to know from this definition. One is communication of information about cost. So one is communication of information about cost. Now we need to talk about cost. So we identify, we measure, we analyze, we communicate. We can also ascertain that cost. Now, once we do all those processes, we use that information to do what? To make decisions. So we have 2 main components here. One of the components is to analyze cost, to ascertain cost, to communicate information about cost. Then after that one, then you can make decision concerning that cost. Now we can continue. That's the simple definition we can use. Scope. So we did this one in MA. That's why it's Kaitana. Scope of MA. Scope of MA. Number 1, you can talk about so when you talk about scope Scope refers to the area. It refers to the area of knowledge. It refers the area of knowledge. It refers the area of knowledge that management accountant to be familiar with. You be familiar with. We should familiar with in order to do what? To execute the management function. In order to execute management function. And you know some of the management function for leadership? You have learned about management function. A good example is planning. We have what else apart from planning? Leadership. So we have planning. We have leading. We have leading. We have what else? What other? What other factor? What other form of meaning? Management factor, do you know? Anyway, I was saying that when we talk about the scope of MA, we are trying to talk about the area of knowledge that the management accountant is familiar with in order to do what? In order to execute management function. Also, and to consider a good example of group management functions become leading, organizing, planning, and so on. You know some of them. So in case screen yangu ikosa kuwa clear, mtaniambia because sometimes inaweza nini yenyewe. So in case you just inform me. So now let's continue. Now, example of those scopes. Example of the scopes. So number A. Huku mnanisikia? Do kuna nini? Kuna kelele zaidi ya nje, but I hope I affect. So we are saying we are to give examples of these scopes which we need to know about it. So number one, we can talk about the analysis of cost. We can talk about communication. These are some of which you can say. Let me give you some lists. Good, we have some lists. Now, what would be an example of those scope which we might need yes, kama kuna swali? So now let us just add this. So let's talk about common area of knowledge. Common area of knowledge. Nimekata kuandika common area of knowledge. So the common area of knowledge, which you can put number one, we talk about financial accounting. This is one of the area which relates to email. We talk about commercial law. Commercial law, or the company law. Those are areas which relate to the field of the area of knowledge of EBA. We have economic. Number D, let us see. Number D, we'll talk about auditing. Then assurance. We'll talk about financial reporting. To provide information about cost, or the email might provide information about cost. The financial reporters. You have F. You have financial management. Financial management. You have G. Taxation. Then namalizia mwisho H. Information, communication, technology. Information, communication, technology. Now we can talk about scope now. Once tumeongea kuhusu hiyo, you can add something to do with the scope. You can add something to do with the scope now. Scope of email. Now the scope, you need to know that it involves the following. Number A, identification of information about cost. Number B, once you identify, measure. From our definition, measurement of information about cost. Number C, analysis and ascertainment of information about cost. So analysis and ascertainment of cost about cost. Then mwisho, we can talk about communication of information, not second last. Communication of information about cost. Now, once we have identified, measured, analyzed, and ascertained, we communicate. Once we communicate, the last scope now will be decision making. So making of final decision about cost, making of decisions about cost. So making of decisions about cost. Now that is all about the scope and the area of knowledge. We can take a look on the difference between financial accounting and management accounting. So this is something we did in intermediate, but we can talk about them. We can talk about them. So the difference between MA and FA. You can try to go with that table. So tumeamua tutaenda table. Na sawa sawa. So pia katibu kangu kanaonekana. Kama yanaongea? Ukiwa na swali, you can text. But in sawa, continue. Now the difference number one, it uses monetary terms. It uses monetary item. So it uses monetary. Okay, let's not terms. It uses monetary terms. This one is a field. Let's make a field on this side. Where is it? Then this one becomes a main. That becomes a main. So it uses monetary terms. On the other side, it uses both monetary and monetary in non-monetary terms. It uses monetary and non-monetary terms. That is number one. Number two, accounts need to be audited. Accounts need audited. The other side, no requirements. No requirements to audit accounts. So for financial accounting, there is need to audit the statements, but for me, no requirement. And then this one, it is guided with principles. It is guided with accounting principles. Accounting principles, i.e., IAS and IFRS. So international accounting standards and international financial reporting standards. This one has no guiding principle. It has no guiding accounting principles. There's no guiding accounting principle. And then we can also add some differences here. We have FA Amen. So we can add some there. So in case utakuwa unaona utaniambia kama iko sawa. Now let us add at least 2. The rest we can check in your notes. So it is based on past data. So it is based on future data. So wakati wanatangaza financial statement ni information yenye imeshafanyika. So kama information ya financial report ya hii mwaka ni the previous items zilifanyika. But for AMA they use the current or the future information to make decisions. So this one is past, this one is present or future. Now you can also add the last one. So AFA is a mandatory. It's mandatory as required by Company Act. Now, whether the company likes it or not, financial accounting must be there. So whether the company wants it or not, financial accounting must be there in any organization. So it's a mandatory. Financial accounting is a mandatory field as required by the Company Act. But for MA, it's not mandatory. It is not mandatory by Company Act. It is not a mandatory by the Company Act. It is not a mandatory by the Company Act. Now, that is all about it, which you did it in intermediate. We are just now roles of management accountant. Jika inaonekana hapo. So roles of management accountant, roles of management accountants, which we can talk about. Number 1, so number 1, the managing function, which are critical, the success of business. That's number 1. So and remember, management function are examples like leadership. So when we talk about management function, you have various functions of management, like planning, organizing, leading, planning, so the role of management accounting is to make sure that those functions which are critical to the business are well performed. So they help in managing function. Number 2, support organization for strategic development. A good example of strategic development ni kama competitive edge. Now, coming up with the policies that you might be able to survive in the market. One of them is competitive edge, where you might decide to cut costs. So you come up with strategies of cutting costs. So you reduce costs as much as possible, or also how to target your customer in terms of sales. That's all about strategic development, of which you have done it in leadership. Those who you have leadership, you will become aware with the environmental tools. Environmental tools in management. Next, another role of management accounting is provide useful information about cost. Provide useful information about cost for better decision making. Better decision making. So to provide, and that is here to the owner HAPA. So they communicate the information about cost for the purpose of decision making. Also, that one comes part of their role. And another one, ensuring that organization operates with integrity. To make sure that the organization operates with integrity. So that is also another role which is very important, to make sure that the organization operates with integrity, or they are operating in a manner which is required by the law. It's required by the law. So we move on. The last one, which is the last role, we have other roles. You can check in your email. For example, we can also, in an example, you can also say another role of management accounting is to identify cost. That's is your role also. They also measure cost. You can also add measuring of cost, analysis, and the ascertainment of cost. So communication to make a pale, decision making to make a pale. So you have to generate an EE, which you can also add identification of cost, measurement of cost, then analysis and ascertainment of cost, which you can say they also have been analyzing and ascertainment of cost. And then mwisho, we can talk about providing management with periodic report. Providing management with periodic reports. With periodic reports. What are those examples of periodic reports? Which are those examples of periodic reports? What are those examples of periodic reports? Now, a good example of periodic report is budgets. So you might find you are preparing budgets from time to time. Therefore, that one is a good example of a periodic report. So these are some of the roles which you can add with now: identification of cost, measurement of cost. I think Just help them with other. They also help in identification of cost, then measurement of, so assessing measurement of costs, measurement of costs. That one is enough when it comes to the role. Now let's talk about ethical standards. Let us talk about ethical standards of management accounting. Ethical standards of management accounting. So ethical standards when it comes to management accounting, ndio kutoka next class itakuwa tuna mahesabu. Topic 1 ndio tulikuwa na topic 8 ni theory. Lakini topic hizo zingine topic wait, so we have 8 topics. 2 of them is theory, topic 1 na topic 8 ya mwisho. Hizo za kazi zote ni mahesabu. Let's talk about ethical standards. Of management accounting. So ethical standards, management accounting. Now we talk about ethics. Mostly we are talking about doing the right thing at the right time, or to be ethical, to comply with the law, to be independent if you are an auditor, to maintain what we call integrity, also to practice due care. Due care when we are doing your job at work. So you do what we call due care so that you don't harm your clients. We also have things like confidentiality. Also, all those are form of ethical standards which are applicable in MA. Not in MA, but in all the field where we practice professionalism. It can be in management accounting, it can be in engineering. So it's not limited to MA, but it is good now to know those items. Number 1, so some of the ethical, we have integrity. Integrity. This refers being straightforward, and honest. So in workplace, we need to maintain or to practice integrity. Number 2, independence. So if you are an auditor, you need to practice what we call the independence. This one is to avoid the conflict of interest between you and the other party. You need to be independent. So there is need to avoid biasness. So there need to avoid biasness in conducting transaction. So in conducting various transactions. So, or to avoid, you can also talk about you become independent in order to avoid conflict of interest. So mostly to avoid conflict of interest. So that's independence. Next, competence. Did you hear? Competence and due care now involves maintaining higher level of professionalism. So you maintain the highest level of professionalism. So maintaining the highest level of professionalism. So involving maintaining the highest level of professionalism. You can also talk about credibility. This is again you can experience in your own time. We have credibility. We have clients, money. So you can say accountants should not misuse clients' money. So accountants should not misuse client money as they hold so as they hold fiduciary duty. So accountants should not misuse client money. Reason why? Because it's their duty to protect the client money. Because it's their duty to protect the client money. Move on. Benefits of ethical consideration. Benefits of ethical consideration. Benefits of ethical consideration. What do you think is the benefits of ethical consideration or ethical behaviors in organization? Number one, it promotes highest level of self-regulation. That is the main one. It encourages people to do their work without being regulated because you know what governs you. So you can do things without being regulated. So it allows self-regulation. Number two, it helps in minimizing conflict of interest. It helps in minimizing. So it helps. It helps in minimizing conflict of interest. It helps in minimizing conflict of interest. Now, the reason why we are saying it minimizes conflict of interest is because you are practicing. Because you are practicing independence. So when you practice independence, then you minimize the conflict of interest. Next, we can move to the next one. It helps in boosting public. It helps in boosting so tunasema public confidence. Public confidence. So it helps in boosting public confidence in the world of professionalism. In the world of professionalism. That is correct. Now, when you maintain due care, when you are credible in your working, you don't have scandals, then you can be confident in any place that you go when it comes to professionalism, because you have maintained what we call all those items. Another one, it improves. It improves credibility. So another benefit that it improves credibility and promotes trust. And promotes that's another advantage or benefit of having ethical behavior within the organization. So it promotes and improves both credibility and trust. Next, it reduces cases of legal litigation. Now, if there is ethical behavior or good behaviors within the organization will not have cases in the court of law. So kumaanisha, because they are practicing in a manner which is required by the law, they shall not have any case filed against them in the legal court, and therefore it reduces the legal litigation. And then it helps to regulate the behaviors of professionals. It helps to regulate behaviors of professionals. Now, ethical behavior is there to regulate the behavior of professionals. So that's a good benefit, because the accountants, the managers will work in a manner which is required as regulated by the ethical considerations. Factors making management accounting to change. So what are the factors which might make management accounting to change. So then you can put it here. Factors making MA to change. Number one is the technological factor. Technological factors. So technological factors. So factors making MA to change. One of the factors is changing technology. Now, so technology keeps changing, and therefore the systems of management accounting, there is need also for those systems to change. So it will make how we manage accounts through management accounting from time to time because of changes in technology. Number two, customer demand. Customer demand might also make how we manage MA to change. So when the number of customer increases, then we might have different way to manage the account so that we can accommodate them. Then I'm also group competition. Also, when we have group. So group competition could be another reason. So group competition could be another thing which might change how management accounting operates. That is another reason. Now let us go to another item. Advantage of MA. Advantage of MA. Advantage of MA. Number one, it helps reduce cost. It helps in reducing cost. So it helps in reducing cost. Number two, improves. It helps in improving cash flows. Improve cash flows due to better financial management. Due to better finance management. Also, due to cost benefit analysis. Cost benefit analysis. Due to cost benefit. Due to cost benefit analysis. So it helps reducing cost due to cost benefit analysis. Due to cost benefit analysis. Then mwisho, which we have others from your MA, you can go and check. Next, it helps in enhancing. It helps in enhancing business decisions. So it helps in enhancing business decision. Now, limitation. So we have others. You can go and add from your MA. So you can go and add from your MA. So make sure you also read topic 1 of MA. Number 1, evolution nature. Evolution nature. Evolution nature of MA keep on changing. Keep on changing. So that one is a limitation, because when the nature of MA keep on changing, then there is need for also people to change, and that one might be a problem to keep on changing. So the evolution nature of MA keep on changing. Another limitation, lack of knowledge. Lack of knowledge in the related areas. In the related areas of MA pose a challenge in management accounting. So lack of knowledge in the related areas of MA might pose a challenge to this field of MA. So that lack of knowledge. Another one, it relies in accounting information which might be inaccurate or manipulated. So it relies to accounting information. Remember accounting information, because it is prepared by a person from the financial accounting, that person might decide to give wrong information. And when they relate to that information which is wrong, then they might end up making wrong decisions. That's also a challenge. It is or it relies on another information provided by another party, which might be incorrect. Next, it is highly affected by personal biasness. So, because this account is not a mandatory for the account to be audited, then one person might decide to be biased and to take advantage of such kind of information. So in that case, it is subject to biasness, which is not a good idea. Another one requires continuity and participation. Requires continuity and participation. Which is time consuming. So it requires regular participation. For example, budget. The budget is something you prepare on a weekly or monthly basis. It is there from time to time. And then there is correction of budget. So a lot of stuff in between. And therefore requires continuity and participation, which might be time consuming. It might also lead to overload of work, which might also lead to overload of work. So it requires a lot of continuity and participation, which is time consuming, and might also lead to what? Might also lead to work overload and pressure, which might lead to workload and pressure in work. So those are some of the limitations which you can find. And that one marks the end of topic 1. We can do topic 8 because it's also theory, so that we finish today. We come out to finish the next 30 minutes. We can finish topic 8. So topic 1, that is strategic management information. And we shall talk about the strategic parts a lot inside. So we have several things. Others, sijasema mingi because I'm assuming you are doing leadership or umefanya leadership. So if you find a question on strategic, then you can also apply what you have done in leadership. Let's go to topic 8, which is also theory. So topic 1 and topic 8 is theory. So you have 8 topics. So topic 1 and topic 8, they are the theory. So topic 8 is called environmental management accounting. Environmental management accounting. That is topic 8. So we finished the topic 1 and topic 8. So topic 8 is the next topic. So that's to introduce topic 2 in the next class. Vile najua topic 2 tutafanya kama class 3. Maswali ni moto. Kama hesabu ni moto. So lazima tujipange. So topic 2 mpaka topic 7 ndio kumoto. So topic 1 topic 8 haina mambo. So topic 8 so environmental what? Management accounting. Environmental management accounting. Environmental management accounting. Now, let's define what's environmental management accounting. So, what is environmental management accounting? Environmental management accounting. Hapo. So let us try to define it. So it is the process. It is the process. Is the process of identification. Process of identification. Correction. Process of identification. Correction. Estimation. So estimation, internal reporting, and the use of material and energy flow, and the use of material and energy flow, information about the environment, in which the entity operates. Now, tunasema the process of identifying, correction, estimation, internal reporting, and the use of the material and energy flow information about the environment in which the entity operates. Now, in short, it tries to talk about how to correct the information, how to identify and correct the information about energy or about cost which relates to energy, and how we should maintain a good environment when it comes to management accounting. So the most important words here is, number one, we identify the energy, the cost which relates to energy. Then we correct that cost which relates to energy, which might harm the environment, in short, which might harm the environment. That's what we are saying. Process of identifying, correction, estimating, and coming up with internal reporting, and the use of those materials and energy flow information about the environment in which the entity operates. So this is a good field because it will help us to know more about the environment. So it will help us to know more about the environment and how to protect the environment when it comes to costs. When it comes to costs, let me see if I can add something on that one. Let me see. Now we can add this one. So EMA. Let's add this one here. A good one. Now, but this is a good definition which you can use in an exam. This one contains everything. So we can say here, refers to systematic approach. Refers to systematic approach. To refer to systematic approach to finding practical way of saving water. To find practical way of saving water. So we need, number one, we need to save water. We don't need to do what to pollute the water. Number two, energy saving, which is the most current topics in the world. Energy saving in order to avoid what we call global warming. That's another topic which is very important and very sensitive. And reducing negative environmental impact. You can also use this one as definition. Environmental impact. Now, from the information number one, we are talking about something to do with energy flow. So material and energy flow information. So that information is very important for the purpose of identifying that cost which might relate to this kind of energy flow, and how do we collect such kind of cost in order also to prevent what we call the negative environmental impact. So EMA, environmental management accounting, is there necessary to guide the entity in which that entity is operating in that environment in order to reduce the impact of pollution, or to come up with a saving mechanism to save on what is there, what the nature has provided, like water, we have energy, so to reduce all the kind of items. Scope of EMA. The environmental management accounting. Scope number 1. Identify environmental problem. Identify environmental problems. Number 2. So number 1, the main scope is to identify the environmental problems. Number 2, and find solution, and find a solution. Now you identify problems and solution. So to identify environmental problems, solution. Number 2, we're talking about to restrict and regulate exploitation of natural resources. Now, EMA is there to regulate and restrict the exploitation of natural resources. And if they will not regulate, ni kumaanisha, if what company afanya mining, ni kumaanisha they shall destroy the environment through hizo maholes. Now they need to restrict the rate at which they are exploiting the natural resources in order to safeguard the environment. So there's need. So the another scope of EMA is to restrict and regulate the use of natural resources. Number 3, the scope to reduce extreme of, so to reduce impact of extreme events. Now, which kind of events which might come because of environmental issues? For example, when we pollute the air, sana, we might have what we call the radiation from the sun. So that one might affect the people. Now, the purpose of coming up with EMA is to reduce the impact of radiation from the sun, so that we don't pollute so much, so that we can have a lot of impact in terms of radiation. Next, when it comes to mining, if we use those machines and kuna hizo bombs wanaekanga ndio waripue hizo materials. Now, if they use so much of those items, it might lead to earth shaking, and therefore we might have effect of vitu kama hizi na earthquake. So because of more exploitation of mining areas, they might trigger what we call earthquake. So that's an extreme event which might lead to a lot of damages and a lot of life. And therefore, in that case, there is need for the EMA to reduce the impact of extreme events, i.e., we can talk about tsunami, earthquake, which might be triggered by events such as mining. Tsunami, this all comes because of global warming, or because of pollution, or destruction of forest, which is part of environmental. So might lead to tsunami areas and others. So those are some of the examples. So that one is in the bracket because the natural disasters. Natural disasters due to environment mismanagement. Environment mismanagement. Now you can go to the next scope. You can go to the next scope, which you can say to make use of optimal resources effectively and in a good way. So you make use of resources, but in the required way which is prescribed by the law and regulation, or what the environmental management wants. So which it is provided by the law. Now, fields in which EMA is applied. Now, fields in which EMA is applied. Field in which EMA is applied. Now, what could be such kind of fields? So, which fields could we say that EMA what is the field? So, field in which EMA is applied. Back to Marizia. Now, number one, we can say number one, project implementation. Number one, project implementation. Now, when the company is launching a project, now they need to consider cost. They need to consider environment. So it is applied. It is one of the field which is there to consider is project evaluation. Number two, investment. Investment appraisal. Then appraisal and product pricing. So we are just stating itafanya more huko ndani kwa tatizo ndani zikuko. So we shall do more on those items to review. Financial budgeting. Financial budgeting also requires EMF. So when you are budgeting, you need to consider the environmental impact of that budget. So what are they in that budget? Then strategic formulation. So strategy formulation. Number five. So management information system. Management information system. So MIS, the management information system. So those are some of the fields which the management accounting might utilize. Now, let us talk about roles of environmental management accountants. So roles of environmental management accountants. Now, what's the main role? Let us see some of their roles. Then capital investment decision, number one. Capital investment decision. Now they have to do what? To carry out environmental investment decision in order to decide which project is viable and which one is not. They use mostly NPV method. Now, but remember, you need to consider it in terms of impact of environment. So we can say this one because we need to consider the impact of the environment. We can explain and say management accountants. So management accountants evaluates impact of the management accountants evaluates impact of environment. So evaluate of environment on project viability and implementation. On projects viability and implementation. Now, in that case, if the project is viable and if we implement that project, then what is the impact of that project in the environment? So that is number one. It's their role to come up with a report on the impact of that project in the environment, having considered its variability and the implementation. Next, costs determination. Cost determination. Remember, we are talking about the environment. So management accountants have the responsibility of quantifying the environmental cost. So management accountants have, so management accounting have the responsibility of quantifying environmental costs. A good example is cost of pollution. So what is the cost? Now, if we pollute more, then what will be the cost of polluting that more in terms of money, in terms of effects? So those are calculated in terms of cost. Now, if they were to be charged by the government or by the international community, which deals with the environment, so what would be that cost of polluting? Now, they need to consider that cost and put it at a particular level where it does not exceed a particular amount. Now, the management accounting have the responsibility of quantifying the environmental cost. and dissemination of such information. So such information relevant production units and the government, the authority. So they have the responsibility of determining the cost of the environment, and they need to share that information with the production unit so that they do not pollute more. And also they need to share that information with the government so that the government knows the level of pollution from that company. Number three, process and product design. Process and product product design. Process and product design, and we can see management accounting have the responsibility of assisting the production department to implement processes and product design that are environmental friendly. So tunasema management accountants have the responsibility. So management accountants have the responsibility. So management accountants have the responsibility of assisting production department So the AMA have the responsibility of assisting the production department to implement process, to implement process and a product design. Which are environmental friendly. So the keyword here is the word environmental friendly. How about the keyword in the gun? Environmental cost. Then after the keyword is the impact on the environment. So they need to assist in implementation of those processes in product design, which are environmental friendly. Which are environmental friendly. So which are environmental friendly. Now, do you have any other? Yes, we have others here. We have I will send you the PDF. Just let me now state it on the screen. Then I'll give me a PDF. Performance evaluation. Performance evaluation. Performance evaluation. Then you have provision of information. So those are the other factors or other roles. So number one, performance evaluation. So they need to do evaluation of the environmental impact. Now they consider their activities and how does their activities affect the environmental impact. Now you can see for project evaluation that management accountants are responsible for setting budgets and determining budgets management cost. So it is their role to set budget and those budgets which relate to environmental cost. That is performance evaluation. So the management accountants are responsible for setting budgets. Those budgets must relate to environmental cost when we are talking about the environment, so that we can compare the expected cost, the expected environmental cost, and the actual cost. Now, if there is variance, then there's need to correct. So we need to set how much do we need to, in terms of cost of environment, how much do we need to pollute? Because any company that deals with the production must pollute the environment. But we need to do what? To come up with our budget to see how much can we pollute, so that when we pollute more, then we find a way to collect it. So that is all about the performance evaluation. Then number provision information. Now this is providing information concerning environmental costs to the management and the relevant authority. The management accountant provides important monetary data needed for the environmental management accounting activities. So the management accountants are responsible for providing the information about the management environmental costs for the purpose of making several decisions. That marks the end of topic 8. So that one, after that point, marks the end of topic 8. Now, but in an exam, for exam purpose, let me give you. So according to notes, they share half of topic 8, but we can add something. We can add something on this topic. Now, number one. So, ways in which, so this you can find a question like this one in an exam. For topic 8 steps. So in an example, these are some sample questions which you can find in an exam with their solution. Now the question reads, this is how the question reads. Ways to give ways of aligning, give ways of aligning business operation with environmental issues. With environmental issues. So give ways of aligning business operation with environmental issues. Number one, we can talk about cost reduction. Cost reduction, and we can say companies with effective environmental cost system, are more likely to take advantage of cost reduction. cost reduction and improve opportunities and improve opportunities. Now this one is one of them. Now tunasema give ways in which ways of aligning business value with the environment. Number one is cost reduction. And tunasema a company that has an effective environmental cost system. So the short idea is the one environmental cost system. So if a company has good or effective environmental cost systems, they are more likely to do what? To reduce costs and improve efficiency. Number two, compliance. Number two, we talk about compliance. Compliance, and you can see this entails the EMA, environmental management accounting, to support environmental protection. Environmental protections. Environmental protections through cost efficient compliance with the environment. So this one is not next. Number two, which is compliance. Now, so give ways in which ways of aligning this operation with the environmental issues. Number two is compliance. Now, the issue here is what? Environmental protection. So we need to protect the environment, and therefore we need to come up with a compliance, efficient compliance environment. So cost efficient compliance with the environment, so that we can come up with the compliance way. Number three, assisting on improving. So assisting on improving methods for reallocating internal environment costs. Internal environment cost in specific products and activities product and activities in the day-to-day operation. In the day operation. Now, this one is all about the allocation of internal costs, internal environmental costs. That one is on the allocation. So, assessing on improving method of allocating costs. Remember, we have the normal method of allocating costs, but in this case, we are talking about the environmental cost. So one way of aligning this operation with the environment issue is to make sure that we have allocated the environmental cost proportionality to various activities, so that to allow fairness and so on. Number four, which is the last one, developing or seeking capital investment. Developing and seeking capital investment So development and seeking capital investment and appraisal tools. And appraisal tools. Developing and seeking the capital investment in the appraisal tools. The appraisal tools that are more efficient, that are more efficient to help resolve conflict between environmental managers, conflict between environmental managers, and traditional financial management, financial managers. Now, these are the keyword here is the word, the conflict between environmental managers and the traditional finance managers. Now, that's another way in which we can resolve some of the issues. So we come up with capital investments and appraisal tools which are more efficient to resolve the conflict between the environmental managers and the traditional managers. So those tools which we shall come up with, for example, if it is NPV, which is a appraisal technique, or whichever method which we can come up, that method should suit the environmental managers and the traditional managers in terms of environmental conservation. Now, another question which you can find in an exam is challenges of EMA. Challenges of EMA. Challenges of EMA. I think what my piano, but you can also add here something. Challenges number 1. So it requires a lot of support and collaboration. Number 1, it requires a lot of support and collaboration with other different functions of the organization, other different functions of management. Now, it requires a lot of collaboration, but in practical cases, there is no that collaboration. So that one becomes a challenge. So the collaboration is very hard to maintain or the support is not there. So people don't want to maintain the environment. They want to destroy the environment in order to benefit. So there's no collaboration. Number 2, most managers are not willing to adapt EMA. So most managers are not willing to adapt EMA fully. Because it comes with a lot of responsibility. So that becomes also a challenge. That one becomes also a challenge. So most managers are not willing to adopt the EMA fully because it has a lot of responsibility. So the manager does not want to be, don't want to be responsible for any action when it comes to environment. So most managers are not willing to adopt the EMA That one becomes also a challenge. You can also say another challenge which might be affecting EMA. Now, lack of knowledge. And skills by most accountants concerning EMA. So lack of knowledge and skills by most managers. The lack of knowledge and skills by most managers regarding what? EMA. Regarding EMA. And then we can also add the last one. I hope inaonekana. So lack of knowledge and skills by most accountants concerning EMA. You can say ya mwisho. Lack of sufficient framework. Lack of sufficient framework. Lack of sufficient framework and inadequate guidance. And inadequate guidelines. So lack of sufficient framework and inadequate guidelines concerning EMA. I think of inaonekana concerning EMA. So lack of efficient or sufficient framework. I think we are about to finish. Number 5. We're going to talk about lack of sufficient framework and inadequate guidelines concerning EMA. So that will pose a challenge if they don't have the required framework or the guidelines concerning EMA. That will pose a challenge. And then lack of general information. That's a challenge. Information about environment. So lack of general information about the environment. The lack of general information about the environment. I think you can also talk about categories of environmental costs, which you might also find in an exam. Categories of environmental costs. Let us just talk about them. Categories of environmental costs. Time sangapi? What is the time? We have like 6 minutes. So 6 minutes, I think we have like 6 minutes. Okay, let us, number 1, environmental implementation cost, number 1. The one category number 1, environmental prevention cost. Environmental prevention cost. We say cost of activities. Cost of activities undertaken. These are cost of activities undertaken to prevent production waste. Prevent production waste. So cost of activities that are taken. Cost of activities that are taken to prevent production waste. Number 2, environmental appraisal cost. environmental appraisal. Environmental appraisal costs. What are those costs? Costs incurred to ensure organization complies with the regulation. Cost incurred. Cost incurred to ensure that organization complies with required standards. With required standards. Number three. Environmental internal failure cost. Environmental internal failure cost. Environmental internal failure cost. Yes. Any question? Okay, no question. So cost incurred from performing activities. So cost incurred from performing activities that are produced contaminants in the way. Contaminants and waste. Contaminants and waste. So cost incurred from performing activities that have produced contaminants and waste that have not been discharged. That have not been discharged. That have not been discharged to the environment. Into environment. Then the last one, the one to win environmental external failure cost. Environmental external failure cost. Environmental external failure cost. Environmental external failure cost. Now this one is after discharge. Now this one is after. So the key one in the change, they have been discharged. So cost incurred. Cost incurred when performing activities. Cost incurred from performing activities after discharging waste to the environment. After discharging waste to the environment. So those are some of the environmental costs which you might find in an exam, which you might often find. We have two terms here, we can define them. We have two terms here. I think we let us define it. Let us define it. Let us define these two terms. So differentiate between number one. So we have two terms here. The differentiate between internalized environmental cost and externalized environmental cost. Those are internalized. internalize environmental cost. Look impact. Let's define it. Internalized environmental cost of the impact. So it means, this means, so this means, it means taking the external cost. This means taking the external. So this means taking the external costs of pollution This means taking the external cost of pollution of the environment as part of producer cost. So this means taking the external cost of pollution of the environment as part of the producer cost, as part of the producer cost. So this means taking the external cost of pollution as part of the environment. So this means taking the external cost of pollution of the environment as part of the producer cost. That one is all right. So you integrate all the costs together and then you include them together to form the producer cost. So you bring them together. Then you have the last one, externalized environmental costs of impact. Allow me to do away with this one. So tunamalizia na externalize. This is the last one, environmental cost. So impact. So what is that? Now this is use of technology. So this one is where we use technology. So we can say so to Mariziel, the last part. So we say the use of energy technology. This so that one we can say is the use of energy technology, which is often associated with impact of human health, which is always associated with impact. So this is where most people to me are the energy technology, which is always associated with the impact of human health. So it's human health and the environment. Human health and environment. That is all about it. So when we talk about the external, we are considering the use of energy technology. So mostly is associated with the impact of human health. So how does the energy technology affect the human health, and also how does the energy technology affect the environment. So they include the following. Give examples. Examples, which number one, we can talk about damages of human health. So we have damages of human health. Then impact on crop. So pia mazao. Impact on crop yields damages. So impact of crop yield. Then we have the ecosystem. Ecosystem damages. So that one marks the end of topic 8. That is on the impact of the environmental. So environmental management accounting. So that one marks the end of topic 1. In topic 8. So make sure you review some of the theories from your past paper. I will share with you the past paper from last sitting, so that you can see some of the questions which you might find in topic 1 and topic 8. But we have utilized all the information that we need in order to answer any question which you might find in your past paper. Now, any question before we say the day is over for today? So any question? So I think there's no any question, so we can meet on Monday. So we shall meet on Monday.